Good afternoon, everybody. This is Dennis Wilburn. Welcome to Aftermarket Mondays for the Active Trend Trading System. Good afternoon, everybody. Rick, Skip, nice to see you guys. Dave, David, Bob, Don. Now, this is one of our free webinars that we do. We don't get into the nuts and bolts per se of our individual trades for premium members, but we do like to provide folks with opportunities to see what we're looking at. And also, if you are a active trend trading member, either a premium member or one who just gets the free newsletter, that's absolutely awesome. And we do provide setups, one bonus setup per month, approximately somewhere between 10 and 12 per year, just to thank you for being an active trend trader. Then, of course, the premium members get a whole bunch more than that. But this is me, and let's get going here. This session is intended to be somewhere between 10 and 15 minutes, which is very quick pace. What's the market doing? What looks interesting for the week? I want to remind everybody that all the materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance does not guarantee nor is indicative of future performance. So the objective of this session is to provide timely, actionable intel at the beginning of each week. Now, we provide a wraparound session on Friday called Making Money Trading Stocks and ETFs. It basically is the twin webinar to this one. It also is a free webinar. Just so people can plug in and say, okay, hey, what's the market recap looking at? We do a real quick market review, stocks and ETFs setting up, and then here's some of the refinements we've made in the active trend trading system going into 2018. Composite watch list provided to all active trend trading members. What this is over the weekend, I capture every stock that appears on one of the premium IBD 50 stocks. It includes over 500 tickers every week. And then I basically go through some analysis of those tickers to see which of those tickers appear to be on more than one watch list, which is oftentimes a show of strength for that particular entity. And then also some other technical analysis on those, so I can then basically put out a revised list that is typically only about 100 tickers, but it captures all the stocks, and then we hone in on typically the top 10 of those, and they provide an additional short list of potential stocks that look good for the year. And everybody who's an active trend trader has access to that, and we publish that in the Art and Science of Active Trend Trading post every weekend. And enhanced portfolio building trades, we're doing that. Simplified training opportunities. So let's take a look. Okay, here's where the market, basically, this is about an hour and a half before the market closed. Here's where we're sitting so far. We haven't really done anything with active trend trading except get our strategy 3 position in place. Those of you who are premium members, on tonight's stocks on the radar video that I provide for the premium members, I will be going, okay, now that we have our 3 leaps position in place, now how do we trade it? How do we be patient? And so I'm going to be providing that to say, okay, here's what we're looking for next, so you can basically plan along with us for getting into those particular trades. Strategy 3 did really well for us the last few years, providing several 100% winners. So let's take a real quick, let's move along. Okay, I want to remind, here's what we did fourth quarter with our bonus trades last year. And so if you are an active trend trader member, about 1 per month, and we did play, YY, and nugget, and generated a little bit of coin. If folks did make these trades parallel with us, a little bit of extra jingle going into this Christmas. One of mine, seasonality. We're always constantly taking a look at seasonality. January, February tends to be this. I'm following the pink line right now. For the S&P, tends to be kind of just a slow little grind upward before it gets into its more progressive movement to the upside. This is based on 59 years worth of data. And so what we're looking at is these low spots, and they vary in time. They can slide either way, about 15 plus or minus 15 days. But that's when even if the S&P chart doesn't look like this, that time of year is when it tends to catch a bid to the upside, and that's where we want to be focusing on when to get into some of those positions. All of the indexes follow this seasonality. Here's the NASDAQ. You can see with the NASDAQ, get my other pencil out here. Here you see with the NASDAQ tends to be kind of flat the first part of the year, and then gets into a bid to the summer months, goes sideways, and then on up here. Again, we're focusing on tends to be in the mid-February to mid-March is when things tend to start moving, when the NASDAQ to move up, and then towards the end of September, or towards the end of September, beginning of October, to get the last move in the of the year. This seasonality, even though last year's charts didn't look exactly like this, timing on those specific areas of the year for when the market would take off did in fact turn out to be fairly accurate. Here are this is our go, no go table. If you've never been with us before, one of the things I find with so many traders is they get distracted because they're watching too much. In other words, they may have a watch list of, let's say, 25, 30, 40, 50, 100 entities, including ETFs. And so what we've done at Active Trend Trading, we've honed it down to basically 7 ETFs, following 3 of them follow the indexes, 4 of them follow 2 industry groups, and then the other ones 2 commodities. Our core stocks, which right now are Tesla, NVIDIA, Netflix, and BABA. And then some floaters, YY, Grub. Grub we just entered a position today on. And so right now we have no specific setup for any of these. We had a setup earlier on Grub. We got into that as our bonus trade. But in this, for premium members, the interpretation of how you read this is you get into this, and this is posted with the On the Radar video on either Sunday or Monday. This week's going to be Monday, and basically just specifically says what needs to happen before I would be interested in getting to the SPY or the S&P. Okay, need a pullback into support for a trigger. Same thing for the NASDAQ, the QQQs, IWM at resistance. What do I need on that one? I need a little bit of a pullback. XLF consolidating. This is the biotech, the S&P biotech, pulling back. Watch 660 or 6,600, and wait for the setup of the TSI. Rolling over, look to dust. Dust may provide us an interesting opportunity. That's the inverse for gold. Gold may get a little bit of a pullback before it goes back into rally mode. USO, TSI is out of sync. That means the daily and the weekly and the intraday are out of sync with each other. Tesla, wild ride. Absolutely crazy on Tesla. We got into a position on our leaps position on Tesla on Thursday or Friday last week. And while we haven't sold any premium against it, that position is already profitable. To be looking at Tesla, we want to pull back into the 325, 326 area, and then the TSI bottoming on the intraday chart, 1 hour chart. NVDA breakout. Here's the numbers I'm watching: 218.50, Netflix breakout, 205, YY 123, BABA at resistance. Okay, and then TSI on the grub, TSI triggered entry on, and we got in at 71.68 today. We'll take a look at those charts momentarily. So here's what we're looking at: rally pullback, bonus trade, grub on that today. Netflix, Tesla, NVIDIA, YY, BABA, catfish specials, none. What the catfish specials are, folks, is I keep the running list of the IBD 50. I capture every stock that has been on the running list since the beginning of the year. By the end of the year, it's quite lengthy, and that's when I go digging into it to say, okay, what of the stocks that were very favorable on the IBD 50, how many have fallen out of favor and are now at very, very extreme to the downside positions? Those provide a potential great growth stock that's in a extended to the downside position, which oftentimes can lead to a nice rebound. I call them catfish special because I don't want to call them bottom feeder. I don't want to be a bottom feeder, although a catfish is that. 2018, active trend trading. Hey, we follow 4 entry rules, 6 exit rules, just for FYI. We've got a new composite watch list. We talked about early warning alerts and new membership. Strategy 2, which is an option strategy. We've refined that down to where we're shooting now for $500 to $1,000 per week. Last week, that was from previous. Got to get rid of that. Then strategy number 3, we are now open in SPY, Tesla, BABA. Again, those of you who are premium members who are trading this strategy, strategy 3, tonight in the On the Radar video, I'll talk specifically about, okay, now that we've got the positions, how do we not shoot ourselves in the foot by trying to race too quickly to get into those weekly option positions? I think you'll find that beneficial. Remember, there is no holy grail of trading. It's only tools and rules. Talked to you briefly last week about this Tesla trade. This is a study in compounding. What I'm doing with this trade, and I will be, providing these as strategy 2 trades for all the premium members. But my objective is to buy a brand new Lexus NX300 for my wife that she wants to do. And when I buy it for only $5,000. If that interests you, you want to tag along with this trade. And I'm going to basically do it by only trading Tesla. So I'm trading Tesla for a Lexus. And we'll get kicked off with that sometime this week. We're waiting on the pattern. So again, I should put that picture up when I'm going to play that Hawaiian music. So let's take a look at a couple of entities. Let's take a look at I have 4 stocks I want to go over with everybody just really quickly. S&P, SPX, extended away from the moving averages. At some point it's got to revert to the mean, but when, I don't know. We'll just wait on it. No, Sally, no strategy 2 trades have gone out yet. I did a couple of test trades on my own account on my, but I will be providing that Tesla trade to everybody on strategy 2. No strategy 2 trades have gone out yet. Let's see. S&P again, extended. It's getting crazy here. This is almost a vertical leap here. You would anticipate it's like it's accelerating. Oftentimes that can denote that could denote that the entity is getting tired, an exhaustion type move. Again, we are a long way away from our moving averages. Expect a reversion to the mean. Same thing on the weekly chart. TSI is way overextended. I mean, typically it doesn't get much over a plus 65. It's up here in the 85 to, about 85, 84. It is overextended. Doesn't mean it's going to just roll over and dive. It just basically says we are going to, it is in need of that pullback. NASDAQ, same thing. Pushed out. Again, we still have to play the pullbacks into the moving averages until they stop working. Russell's just a little bit more of a slow mover. Basically, just draw a line here underneath the Russell And as it comes back into there, that would be your trigger to get in. You can do the same thing on IWM or TNA. Use a similar type of procedure. Just draw your line across here. When you pull back into it, I know it can be kind of scary, but that's what it is. Yeah, Sally, I did those 2 test trades last week just to make sure we were all set up and that they were going to function properly. And so they are not counted in the active trend trading profit margin. Okay, cool. Now here are, what do I do with them? Okay, here are 5 stocks I want you to keep your eye on just going into this week. Okay, 1, Grub. And here's what we were looking at on Grub going into the, is Grub. Basically, it is coming back down to retest its support at about 70, 78. It's exactly where it came down to today. Now, it can go all the way down to, about 70. That's strong support. TSI, what's very interesting, we got a tick up on TSI last week. However, got a breakout. Then the breakout fell today with a slight downgrade. I'm watching this very closely. We will not let this one go all the way to a 5% loss if it does decide to dive from here, because in reality, it should not break through the 70 level. So we've got our stop loss put in there at 69.90 for those who are in that trade. NVDA, I just want to show you what to be looking for. Here's NVDA. It is doing a really nice breakout. Let's get rid of this. Okay. Keep your eye, whenever you have a breakout like this, often you will get a pullback back down into where it broke out from. So you've got a couple of breakouts. You've got one there at 218.75, and you've got another one just below that at about 217.70. So any type of a pullback into those areas and a rebound, that would be very positive. Again, it may pull back into the breakout area all the way back down to the moving average. That's another thing that can happen with this. But with a breakout like this that was, on higher volume, that breakout number should hold. Now, doesn't always have to hold, but it should, because if it doesn't hold, that means it has basically the breakout has failed. And then we can anticipate a little bit more severe pullback down to another area to jump on board. NVDA looks strong. What else looks strong? OLED looks strong. Now, if you're a IBD breakout person, there's this one. These are still in, within that 5% of the breakout, so you can actually buy them, anytime, but before it gets up to 5%. But again, similar type situation. 193. But once you get a breakout, they're always on 60 to 70% of any breakout. You will get some kind of a pullback towards where you broke out. So you can see 193. Where else might it pull back to? Well, the 190 level has another OLE. So that gives you 2 stocks with potential breakout areas. ANET, same thing. ANET I actually like a little bit more. You've got a cleaner breakout. We can either go one of 2 ways on this. You can go one of 2 ways on this. Is you've got the breakout right there, which that's a good one. So watch any pullback that pulls back towards the 242 level. And just what would that look like on a, there we go. So what that would look like on a hourly chart, as we have found out, we do not want to be buying if our hourly chart is up in the upper reversal area, up in the plus 50 level. And this one is very much above that because it tends to pull back when it's in there. Where does it pull back to often? Well, it pulls back to about the 8-day moving average, which is approximately the 50 period moving average on an hourly chart. So let's assume that this continues to run this way. Let's parallel that. Where would the pullback be? Well, it'd be about there. Where is that? 245. Isn't it interesting that 245 corresponds to just about the midsection of today's candle, plus the larger breakout of this. So 245, I like that level for a potential pullback. Midsection, mid-third of big candles like this often, serve as support. So ANET, that's on my radar for this week, for probably a portfolio building trade. And the last one, and then we'll call it a day because I want to respect your guys' time. ESNT. No, not BABA. ESNT. ESNT kind of interesting. We did get a nice breakout here. It broke out, but it reversed. So it hit support, resistance up here about 46.50-ish, reversed downward. And so now we're going to be waiting for, if this was a legitimate breakout and that, higher volume, but with a selling, even though it's a selling type candle, makes it a little bit suspect, but we are getting all the moving averages facing in the right direction. So I'll be looking for a potential, sometimes may pull back into this moving average or even down to 45 or 45.40-ish. And if it does and rebounds from there, that would be a great place to take a trade. So right now I'm not going to trigger on that, but premium members, now you have an idea of what I'm looking at for the week. And again, I will have my on the radar premium video up a little bit later today to give you a flavor of here's the other things we're looking at, and also I'm going to go into the the mechanics of each one of the strategy 3 trades, Tesla, SPY, and BABA, how much we need to pull in on a weekly basis on a premium basis, how to set up your stop losses once you get into a position when you're selling the premium, and so that's what's coming your way later today. So with that, I bid you have a great rest of the week. And who's going to win? Yeah, that's not Oklahoma, but who's going to win, Alabama or Georgia? Yes, Bob. No takers? The dogs. Okay. Yeah, I'm not a big Bama fan either, Tracy. Okay, good day, everybody. God bless.